Hi, good afternoon, good morning, everyone. I welcome you all to this webinar session, being hosted by Truly Expo in collaboration with PayConnect and SkillRock Technologies. So my name is Ajay Rastogi, and I shall be moderating today's session. And let me quickly share the agenda. So we will first begin with the introduction round by the members of the panel. And thereafter, I'll request our esteemed panelists to share their initial views on the topic. And post the panelist round, we will then take up the audience questions that have been received already. And I'll direct them to one or more panelists for their views. During the session, if you wish to submit any queries, do please feel free to share them with us via chat. We'll do our best to take up maximum number of questions, but within the time limit. So let me now begin with the brief introduction. On the panel with me today, I'm actually privileged to have the distinguished presence of Mr. Robert Atkin. He is CEO of Calida Tech from the UK. Mr. Praveen Dabhai, he is Chief Operating Officer of PayWorld India. And Mr. Rizwan Farooq, founder of B2M Technologies from Bangladesh. And myself, I'm Ajay Rastogi from Pingle Technologies, based in Mumbai in India. So our panelists bring together a very rich perspective on fintech and also hands-on banking experience in both emerging markets as well as in developed markets. So let me actually begin by inviting Mr. Atkin to briefly introduce himself. Bob, over to you, please.
Sure. Okay, so I've been in payments for 20 plus years. Launched my first payment system in 2004. Prior to that, I'd spent some time working for SocGen Investment Bank, putting a global knowledge management system together. And prior to that, working for NatWest Bank in the technology side. So now what we do at Calida Tech, which is where most of my energy is focused, is we create technology for open banking, payments, fintech, blockchain, AI, crypto, stable coins, central bank digital currency, and now NFTs as well. So probably tells you enough about what I've been doing.
Great. Thanks a lot, Bob. Now I'll invite Praveen. Mr. Praveen Dabhai.
Yeah, thanks. I'm Praveen. I passed out from BITS Pilani in 1983. I did my engineering from there. And since then, I've been in telecom, IT industry. And for last 16 years, I've been in PayWorld, where we are building the company and building the platform so that we can target people who need financial transactions through assistance. And for that, we were one of the first ones to get the digital payment license. That time it used to be called cash card. Now it's PPI or mobile wallet or digital wallet. We got the license in 2010. And since then, we have been working on financial inclusion and reaching people who need the assistance most for doing financial transactions.
Wonderful. Thanks, Praveen. And we'll surely benefit from your experience today. Rizwan, over to you, please. Mr. Rizwan Farooq. You are on mute, Rizwan. Are you still on mute?
Is that all right now?
Yes. This is
okay. Third time. Thank you very much for inviting me. This is Rizwan Farooq from Bangladesh, Dhaka. My background is finance and marketing both. I studied in university here and worked in Hong Kong in the financial industry, in banks and then asset management. I acquired some knowledge and some cash from bank from virtue of property market over there. I came back and started my own business as an entrepreneur. I set up stock exchange, stock broking firm, and then also involved with setting up a stock exchange in Chittagong, being in the process of automating Dhaka and Chittagong Stock Exchange. B2M Technology is a joint venture with a Singapore company. We do a lot of mobile application, a lot of mobile infotainment. And right now we are in partner with companies in Singapore for looking at cyber crime securities and stuff like this, and also some banking solution with partnering with Skillrock in Bangladesh. Yes, so it's a great that I worked in the bank in Bangladesh and also in advanced country like Hong Kong. And the way the banking industry is totally evolved and changed, new things are coming every day. So definitely, this is a very nice seminar to talk about those. Thank you for inviting.
Yeah, thanks a lot, Rizwan. And about myself, as I said, my name is Ajay, and I have been a banker for most of my career. And for the last 5 years, I have been in technology, and I'm doing some consulting. I started a technology startup called Pingle Technologies in 2017 to go into data analytics for banking and financial services industry. I worked for Bank of Baroda. It's a large nationalized bank in India, public sector. And then thereafter with Deutsche Bank. I was mainly in the foreign exchange and global markets business of banking. And I left the banking industry in 2015 to become a technologist, and been since involved for the last 6 years in technology aspects with various startups across the region. So with this, let me now just get directly to the topic. So in line with the topic of this webinar, we will be exploring the fintech trends that we are seeing in emerging markets. And now that you've heard from the panel, the host of experience that you see there sitting there, we will be actually gaining from their experiences and what they have learned over these years, and also understand from their ideas of how this the new trends in fintech can, especially in emerging markets, can redefine the banking in these markets. What will be the impact of these trends on business models, on regulatory evolutions, on how these can be growth drivers for the banking industry and also for the fintech. What new opportunities are going to come because of these emerging trends, and what challenges are the banks going to face, and also the emerging fintechs will face. So these are various topics that we will be hearing views today. As we all know that we have seen an explosive growth in the past 2 years due to pandemic, and it's become a global phenomenon. We have seen a huge growth in fintech space, and India, along with several other emerging markets, has contributed very significantly to this growth. So some of the experts that I talked to, they even believe that we have accelerated the growth that would have otherwise taken us 5 to 10 years to materialize had the pandemic not happened. So pandemic has driven, of course, there had been local initiatives by various governments also to push the digitization of their economies, and that has impact. Means that ball had already been set rolling. So now what I'll do is in next 10 to 15 minutes, I'll invite one by one all my panelists to actually give their snapshot of what do they think. Maybe each one of us can take 5 minutes to talk about what are our impressions of the emerging trends in fintech in the emerging markets, and how does this changes the banking scenario. And thereafter, then I'll walk everyone through the audience questions and audience concerns, queries, right? So why don't I start with Rizwan? Rizwan, you come from Bangladesh. Bangladesh has had taken a lead long time ago, before even any part of the world had actually heard of microfinance institutions. And today, microfinance across the globe, at least in this part of the world, is actually using a lot of technologies. And they may not be, called as fintechs in the specific sense of technology being used, but they were an alternative, financial model. They created a very strong financial model, alternative financial model, other than what the traditional banking existed, in 60s and 50s and 80s. So let us hear from you what you think, how the fintech has changed, the markets that you have seen, you're related to Bangladesh, Hong Kong, and India, whatever, and Nepal, whatever you have actually experienced. Let's, hear your views about it, please. Over to you, Rizwan.
Thank you very much for inviting me. Yes, I think coming from totally banking background, I started my career at about 82. And before that, Grameen Bank of Professor Yunus had already put its footprint. And the interesting thing was that it mobilizes primarily the women of the villages. And that became a phenomenal change in the entire, the earning capacity of a household. Because predominantly we are male dominant people, and women going out and working was not something socially even accepted. A lot of places the education was in question also by the family, because it's a very conservative Muslim society. But once the women started earning their own bread, they looked after the house better. Most of the children, the girl was being educated. So I think that Grameen Phone initial stage took very, very important thing. But what has happened now in our country is basically Bikash, and company like Bikash has actually transformed a huge amount of business, because now the money is actually in the phone, and everybody is now getting either a smartphone or future phone. They can open a Bikash account, or there is Nogo, there's another company, or UCash, UPay, much less. But I think that's been a revolution over here. And in a lot of ways, the growth of the GDP in Bangladesh has done well, remarkably well. At the height, we were 8. After pandemic, we are still 5. These are World Bank and Asian Development Bank report. I think it's because of the alternative banking system which has come in. Because traditionally, these people would not go to the bank. And by and large, majority are unbanked. So a lot of people have got into banking now because of this mobile financial service. That's a huge contribution now. And as an emerging market, I can see that a lot of emerging markets are now getting the benefit of this, because Grameen Phone model has gone to many places, microcredit. And now the banks are tying up with mobile financial service to give microcredit. Like there's one bank has just, private bank, Citibank, they just launched 500 taka borrowing from anybody who's a mobile financial service or Bikash membership. So I think the traditional banks are now finding it much more convenient, because the mom and pop shop in the street can receive cash and give out cash. They don't have to walk to a bank to do that. I think it's a huge revolution change in Bangladesh. And that's why I think our GDP and the growth is quite remarkable for that.
Wonderful.
Yes.
Thanks a lot, Rizwan, for this very exciting, update from your market. Praveen, you mentioned that the SkillRock and PayWorld were the first company to start the card and the wallet as it existed then, and it has emerged over the period of time. It has become more and more prevalent across, and also of course the technology and mobile technology has actually also enabled this. So let us hear from you. What are your impressions about the fintech as it has as you've seen the journey emerging in India over these years, and what do you see into the future?
India is a very, very large country. It's as good as a continent. And with so many states, so many geographies, so many people, we need to divide the financial services or digitization or payments into two things. One, which fintechs have developed for India, and another one, which is they have developed for Bharat. And I say Bharat means in the hinterland, smaller places where people might be having a smartphone, but they don't know how to transact. And of course, the banking has also evolved because of the various new payment methods which have come. UPI is one of them, which is getting exported to all across the thing, across the world. The government or the NPCI is planning that. So with ease of doing business, doing transactions on payment, it has helped to grow the taking the digital transaction from cash. And for that, as I said, one is the fintechs in India have developed applications or apps for giving ease of doing transactions to people who are in the cities, who are educated, who are well versed with doing transactions on a mobile phone. At the same time, many fintechs and the regulators have also come out with the regulations like banking correspondent and the fintechs like Payworld, who have developed the platforms so that the people who really need these credits or who really need sachet size insurance products, who really need money to be sent or money to be withdrawn using Aadhaar, they can go to a retail point and they can avail all these financial transactions, financial services, rather than going to a bank account, because India being so large, the bank has a very big challenge on reaching out to the people. And with the government initiatives like JAM, that is Jandan accounts, Aadhaar, and mobile in everyone's hand, we have grown quite a lot in terms of digital transactions. And with the RBI guidelines, India has developed their financial infrastructure also much ahead than any other country in the world, what I feel.
Wonderful. So thanks. And that important differentiation that mapped out was difference between India and Bharat. So the urban and rural divide and the technology divide, and that we are seeing that the divide is now becoming lesser and less evident as we go. So now let me ask Robert to actually help us understand how are some of the developed markets have actually seen their digitization journey in these last 10 or maybe specifically in last 5 to 7 years, as the mobile technology has become more faster and more evolved. How has the transformation kept pace in these markets?
Sure, thank you. The biggest impact on banking in the UK and the EU in particular, but now becoming a global phenomenon, is open banking, without question. And the vast majority of people are now using mobile or internet-based banking. We're now seeing rapid decline in the number of physical branches in the UK. Over 1,000 branches closed last year, which for a population of some 60 million is quite a significant drop in the representation on the streets now. There are a few places now which are kind of like kiosk-based physical locations, but the old traditional branches are dying generally very quick. There are some people who are bucking the trend, in particular Metro Bank are opening more branches. And in fact, my wife yesterday tried to go to a bank, a Barclays bank in central London, and the queue for the counter service was out of the building and halfway down the street. They're just not resourcing physical branches properly anymore. And on top of that, of course, we have the pandemic, and the pandemic is creating a lot of new innovation. It's a bit like we're on a war footing, during a war, technology jumps ahead leaps and bounds. The same thing's happening because of the pandemic, it seems. So open banking started in the UK, and it was a government initiative to drive competition and to reduce costs. And in that respect, it's now very effective. For example, with our open banking service, we can save merchants something in the region of 90 to 95% of the cost of transactions. So you don't have the fixed fee plus percentage that you have with card transactions. There's no percentage involved with open banking, and you typically will get instant settlement as well, instead of having to wait 5, even 10 days for card companies to pay you. There are two sides to open banking. One is data, which tends to be the first thing that countries initiate. And there are now a plethora of companies in the UK and the EU who are using open banking data for credit checking. So instead of going to a typical credit reference agency and looking at data that's 3 months old, now you can go and see live data from somebody's bank account. You can go back up to 5 years, and you can then make a more detailed assessment of whether or not you want to give credit to that person, and extremely quickly. So people enhance the raw data, and they can see, for example, how much money somebody's spending on gambling, and how much money they're spending on lots of other different things. You know, how much is their rent? How much do they have left at the end of the month every month? Are they managing their account carefully? That data is all freely available, providing the individual is given permission for people to look at that data, which tends not to be a problem. We're seeing that millennials in particular are not so careful or not so concerned about allowing people to use their data. So we've been working in open banking since it started. It started in the UK, then went to Europe. Now it's spreading around the world. It's in Mexico, Brazil, about to start in Singapore. First phase is live in Australia, and so yeah, data is live in Australia now. Hong Kong, I didn't know, but it's growing rapidly, and of a survey of over 800 banks, some 80% said they're going to implement open banking. There's a consortium of 27 banks in the Middle East who are implementing open banking as well, and all using pretty much the same protocol as was developed by the UK. It's not dissimilar to UPI. We've integrated with UPI in the past, and I think it will be a natural progress that UPI probably becomes part of the global open banking infrastructure, even if it's slightly different. I mean, our payment gateways can integrate between the two, and invariably you're talking about now instant transactions. So it's a really massive impact on the world, and I think there are a lot of new services that have come up, and more are coming, which are going to take away a lot of the big profits that banks have enjoyed in the past. So we can now integrate NFTs with crypto and fiat, and you can utilize that with a dynamic escrow system to enable trading. So if you're selling a tanker full of oil, you don't have to go through the old-fashioned processes where you've got to put standby letters of credit in place. It can all be done online in escrow with instant settlement, and the NFT that represents that tanker full of oil can be traded instantly, and there are standards in place already for that. So we're now seeing the biggest thing I think that's coming is banking as a service. We're seeing more and more companies offering banking as a service to fintechs in particular, so they don't have to follow the old-fashioned processes, and they can integrate more tightly with the fintech processes that they're offering now. So yeah, a lot of changes and coming faster and faster.
Sure, wonderful. That's wonderful to hear from you about what's happening in UK and Europe, and how the trends have actually, moved from there to the rest of the globe. So you use the term open banking, and we keep hearing a term called digital banking. Are these two terms similar to each other, or they are different in some ways to each other? What do you, for the benefit of our audience, can you distinguish between the two, or should we take it to be the same thing actually?
No, it's not really the same thing. Open banking is a set of protocols rather than a set of technology. So the two work together.
All right.
Yeah.
Wonderful. Thanks a lot. And we will revisit this question again as we go along. So sharing my perspective, for almost 4 decades of banking journey that I had in India. And when I joined the bank first, we were using, those paper-based ledgers to keep the accounts. And we used to make entries of checks and, withdrawal slips and money deposited into the bank. Every transaction was a cash transaction. There was hardly any ever transaction which was, used any kind of digital means. If you had to remit money from, let's say, one city to another city, as a smaller bank, you used a larger bank, and they will send a telegram from one bank to another to say that, okay, please credit the money, so much amount of money into this bank's account with you. So State Bank of India actually, served that purpose, and they were the banker of all the banks almost across the country, except in large cities where Reserve Bank of India played the role. So State Bank used to remit the money from one place to another, one branch to another through telegrams, or you had to actually carry cash from one city to another. And I have done that myself. So from there, when I see banking today, obviously it's unimaginable. I couldn't have imagined anything like this 40 years ago or 45 years ago. So what we have seen in last few years, and specifically in last 2 years, that the way the banking has been conducted has actually become, more and more increasingly digital. So now you can open accounts without, even meeting the banker or without meeting the client. The bank can enable all kinds of documentation online and through apps, and it doesn't take time as it used to take earlier. You don't have to give your documents, your identity or your other address proof and other documents, because now the banks have, and with the assistance of these new technology companies which call themselves Fintech, they have now figured out a way to get all of this information in real time from digital sources, where the consumers actually leave their footprints, or from the government registries, or from other similar sources, that you can actually get all of this data instantaneously. And this has become like speed of thought. If you want to open an account in next 3 to 4 minutes, you can actually open your account without moving out of your home. So when I compare the two scenarios that I've seen at the beginning of my career and at the end of my banking career, I just can't see I can't recognize one against the other. And we are going to see more and more changes coming in. Now you can disburse credit, you can take loan instantaneously. The joke used to be that, in my time when I started banking, the borrower used to come to the bank, take a form for, taking a loan, and then return that form after a few days, and then we will go to his house to, evaluate, and it will take more than a month, 2 months, sometimes even longer for a small amount of loan. Now you can actually do a buy now, pay later transaction online. So you are going on a e-commerce platform, you like something, you want to buy it, and you can instantaneously, as you are actually clicking the button, you are shown an option to actually take a loan. And you can instantaneously decide whether you want to pay it on your credit card or from your bank account, or you want to take a loan from this entity who you don't even know. And they also don't know you as a person. They only know you as a digital entity. And they're offering you a loan. And how are they in a position to offer that loan? Because in that time that you were making your entry, you're selecting the product that you want to buy, you're putting in your details. In that period of time, they have actually verified all your antecedents, your credit history, your standing, your location, whether you're a real person or not, everything they verified. And they're willing to now offer you a loan instantaneously without being bothered about whether this money will ever come back or not, because they know that you're worried about your credit history. So the technology has, of course, changed the way we have done banking in past so many years. And the newer entrants who have entered in with newer imagination, they've actually brought new ideas into this space. And that is what we're going to be exploring. We'll be answering now a lot of questions, and I will begin by asking questions from each one of you. I have put some judgment into who will I ask the question. So please pardon me, and if I don't call out for you, this is to the panelists. If you have a view on a certain question, please feel free to answer, chat in case I don't ask you to answer a question. So let me begin with the first one. And part of this, Bob, you've already answered. What's the difference between, front end only, neobank, and full stack licensed digital bank? So what would you say is the key difference between the two, neobanks and digital banks, which are licensed full stack banks?
Yeah, the biggest difference I see is that legacy banks, I think is probably a good phrase for them, are hampered by their old technology and can't implement things quickly. Neobanks, much smaller, very much less infrastructure. And when you look at the new functionality that fintechs are able to develop so quickly, they're rapidly eating banks away. They really are. They're almost like dead men walking. I'm sure there's a very different opinion on that as well. But if I look at it from the fintech perspective, what can a bank do for me that I can't do myself now? The main difference is cash custodial capability. So where do you keep your cash? But to refer back to your point about the paperwork and everything that goes on, next month we're releasing a new system called digital checks. So right now you handwrite them, don't you, and you send it out and so on. So we're talking to a large insurance company, and they're currently sending out 500,000 physical checks a year. So the cost of doing that is phenomenal. So we're launching digital checks next year, and what that does, the check is self-generated, it's automatically emailed to the customer. Obviously there are exceptions. If you don't have an email address for them, you can't do it that way, you have to do it the old-fashioned way. But anyway, so it's self-generated, emailed automatically, and then self-deposited. So the customer doesn't have to do anything. All they have to do is confirm it's going to the account that they want it to go to. So that will save anybody dealing with physical checks an enormous amount of money. There are many, many new things. I could spend a whole session just talking about new initiatives that are coming up in terms of new services that replace things that banks are doing at the moment.
Sure.
And in terms to your point, when I lived in India, and I was there 2005, 2008, it was so old-fashioned. It was like something from 40 years ago. But the speed that India has changed it is absolutely phenomenal. We've got fantastic systems in place now, and in many places they're better than they are in the so-called developed world. I think India has a massive opportunity. But what would make a lot of sense, I think, now would be to hook up with open banking as a service, because then you're part of a global solution rather than a separate one.
Sure. Yeah. Thanks, Bob. So the next one that comes is, will the digital banks completely take over conventional banks, as you just mentioned, or are the conventional banks a thing of the past? So let me throw this question to Rizwan. How do you see that happening in Bangladesh? Do you see any of these, this is a real fear, or there's still some way to go? Rizwan, you're on mute, please.
I started my banking career in '82, where our ledger used to be kept in, NCR ledger book that time. It was better than just writing on but that time all the banks was putting ledger in the hand, these big books, looking at the account number. We automated from them to Kapiti banking system, which was with Oracle background. So from there, after going to Hong Kong, I was in the bills department, and we used to get huge amount of LC application. And that is the time Hong Kong and Shanghai Bank came up with this product out there that you sit in your office and you open the LCs. So a lot of corporate used to line up in the bank slowly, saying that this is what they require. So banking industry has been kept on changing. The customer previously used to go to the bank and get the transaction. Now slowly, they sit in the office or in the house and doing the transaction. So certainly, over a period of age, I think nobody is going to visit the bank, because I still go there, but our next generation or generation after that I think nobody's going to go to the bank. The bank will be there for the back office, and the front office will be either your laptop or your mobile phone. I think more devices are coming, which is putting banking in your hand. And so there won't be any need. Then why would you go there? There's nothing to go and check your cash because the money is not staying in the vault. Everything will be digital, crypto, and things like this. And the paper transaction is going to virtually disappear slowly. This is the way I see the banking industry evolve. I mean, what I have seen, the way it is changing now. And this Fintech is another aspect, which is becoming the front end of most of the banks. So certainly probably our age people are still going to go into bank, but I think our 50 years younger to us, they will not go to the bank. And after that,
Sure.
Is going to, I would say there would be a concept of branch. I think then you got to go to the museum and find that, hey, the branch used to look like this.
So you have actually also, in your answer, you also answered one of the other questions that has been
Yes.
actually asked, which I was about to put up, whether the branch banking, is this going to be meaningless? So it completely, I completely buy that. The branch banking is going to become a thing of past, maybe in next 5 to 7 years. It already has become very, very seldom that one has to go to the bank. And but the question that
what
you
will
also
happen
answered,
is that
please
what will
go.
happen is that the traditional bank branch won't be there, but there will be a lot of meeting rooms, because to strike a deal, to sign an agreement, you still need to go to the bank.
Sure.
So obviously, but a lot of things you don't probably, only if you think that you have to have a meeting, because the bank director needs to meet to approve the loan.
Right.
And
right.
a lot of time they need to see the customers. So those things will be there, but the traditional work of doing a bank is going away.
Sure.
That even applying for small loans and things like this. So
I get that.
So I think the bank will be there for some of the staff. They have to, there have to be a back office to serve us, or the customers.
Sure.
That will stay, but the requirement will be much lesser.
And also,
we'll go and just have a meeting, go and have a coffee over there.
Right.
So
the question being that
have a nice cafeteria to attract you over there, so you can get some free nice coffee over there.
Right. So the question was that are the digital banks going to completely take over conventional banks? And what I make out of your answer is that the conventional banks have actually also carried on their own digital journeys. And it's not likely that they'll be completely taken over by the digital banks. There'll be nothing like a completely digital bank, because the conventional banks have been fast enough now to adopt technology, and they are becoming digital themselves. So it's a journey which is happening from both sides. Even the digital banks, they also need to have some physical presence somewhere. And over a period of time, we will see that there is some kind of meeting in between somewhere. As you rightly said, there'll be a meeting room. Praveen, would you like to add this to this, or should we move to the next one?
What I would like to add is that when we say digital bank, it doesn't mean 100% digital. It will become a hybrid sort of thing where one can do the transactions themselves, or they can do assisted transactions through agents. So agent banking and will become it's more of a branchless banking rather than 100% digital banking. So banks might not have the branch, and then they will have a small shop is also an extension of the branch, like banking correspondent, which is now in India is almost 1 million banking correspondents are there. So they are extension of the branches, and a lot of people visit them because they might not do themselves. So 100% the digital banks also will have, I think, agents or banking correspondents or something. It will not be, in my view, it will not be 100% digital. When I say digital, means without any interaction.
Right.
There is some interaction, especially in India where the population is large. They're not that tech savvy.
Sure. And there is another question which is about differentiated treatment for digital banks. And I can give the Indian perspective that I don't see that happening, that we will give a differential treatment in terms of any regulatory relaxations, because for that, the government of India will have to, of course, amend a lot of regulations as Act of Parliament, and maybe RBI will have to really, become very, very imaginative to give any differentiated treatment for digital banks. It's likely that they may allow more digital banks to come up. They may give licenses to digital banks, but those digital banks would be required to, follow the same regulations in terms of, the reserve ratios, in terms of, if there are any, if they're lending institutions, then what are the lending guidelines, and those things like those would still be same. So it's just that they are, carrying out the bulk of the business digitally, but they will be following almost similar rules. Like this is the Indian perspective. Yes.
Separate category was introduced in India, like payment banks or small
Absolutely.
finance banks, which have got, they are not full-fledged banks. They are not full-fledged universal bank, but they are bank. Like payment banks can't lend, but they can tie up with a universal bank and lend to their customers. So, so I think mobile wallet, payment banks, digital wallets, they will merge, and for different segment of people, for different use cases, I think different type of, not exactly banks, but fintechs will implement the various journeys to the end customers.
Right. Let me take the next question to Bob. There is a question which says that what is the secret sauce to profitability in the digital banking space, or in the banks which are predominantly digital? So, part of this question you've already answered in one of your previous answers, but please, you could,
Sure. Profitability is tough for everybody, isn't it? Because when you start to get into a particular market, lots of other people flood in very quickly. So then you're fighting lots of other people. So innovation, therefore, and customer service, and making sure that's good. When I look at some of the very large new banks, customer service is abysmal. If it even exists, not that it's great anywhere, but some of the smaller organisations are really terrible and take a very long time to respond to anything. So customer service is critical. If you can get that right, that's a very tough call. If you can get that right, I think that's going to help with profitability, because people will stay. There's the old marketing saying, isn't it, that an existing customer is worth 10 potential customers. So you look after the ones you've got. It's just common sense. And I think that's going to make a massive difference. But somebody I know who has an idea that he wants to take forward in the trading space. He says, do you want 200 million customers with £1 in the bank, or do you want 100 customers with £100 million in the bank each? Where do you space? And most people have gone for the mass market. So examples are people like N26 and Revolut, who have very large customer bases now. That brings very large costs as well. So it's what's your niche? Where do you go? Those banks tend to be valued by the amount of customers they got, and each customer is worth £200, for example. Just like the mobile phone networks have always been traded on the basis of the number of connections they have, each connection being worth £100 or whatever the figure is. So it's a very tough question, because I think there are a lot of factors in there that are out of your control. But I noticed that one quite large new bank in the UK, which is business focused, have now stopped offering overdrafts. They just don't do overdrafts anymore. You have to have a loan. Interesting development. Maybe that's because, I don't know, I'm guessing, but maybe that's because the cost of servicing an overdraft is a lot higher than the cost of servicing a loan. And so they don't want to play in that space and don't need to get enough business from where they want to be. So I think a lot of emerging banks will limit their services, and it'll be a question of what you want and go to that bank rather than necessarily every bank offering everything the same. Does that answer your question?
Yes, it does, actually, to a very large extent, I would say. I would just like to add here that, of course, the profitability will come from, multiple factors. The digital banks being, by nature of their nomenclature, they would be, technology focused. So if they are using the right kind of technology, and obviously then are able to provide a faster customer service, maybe much faster than what the traditional banks have done in the past. And secondly, because they will be doing a lot of work, most of their work through the technology, use of technology, the need for them to hire large teams of people would be much lesser, and therefore the costs would be also lower. They can pass on those cost benefits to their clients, as well as also be more profitable, because they are able to manage their operations much faster and more efficiently, and they don't need to incur the same overheads. And digital banks obviously will not have much of real estate overheads. And when the real estate comes, many other things, insurance of that place, you also have to pay the rental for the place, and so many other things. So they will be saving huge amount of costs, and those costs can obviously be shared between the clients and the banks themselves. So I guess that will be the secret sauce of their profitability, if you really ask me. That's my view on this.
Just to add one thing on that, I
Yes.
think we've already seen that fintechs choose the most profitable chunks of bank activity to go after. So FX, for example, is the biggest one, the first one that fintechs have taken away from banks, to a large extent. And when you look at a bank, where does the bank make money? So trading is one, and I think they've not been under attack in that space because there hasn't been the technology to compete. But now there is, not just to compete, but to improve on the services that were out there before. And that is a massive area of profitability for banks. So fintechs will just be looking for all the areas of profitability, and it'll be very hard for the banks to fight back against the volume of fintechs that are out there now.
Yeah. And so the areas where the banks make money, of course, you mentioned about trading. Then the second would be transactions, and the third is managing the surpluses or lending out money. So the difference between lending and borrowing rates, lending and deposit rates, that becomes their interest margin, and then transactional fees they charge, and of course the trading profits. So these are three broad areas. And then fourth is advisory. So advisory can go on at the traditional banks, because it will take digital and newer banks a huge amount of time and expertise to get there, to be able to dislodge these investment banks and other advisory banks from their advisory pedestals. But the other three, as you rightly mentioned, the foreign exchange has already been displaced. Transaction banking and lending and borrowing are the two areas where we will be seeing that they'll start nibbling into those revenue portals also. Praveen, you have any views on this? Would you like to know?
No, I think I agree what you have been saying and
Right.
saying. So I think
Right. Wonderful. Thanks. Rizwan, you want to add something to that, to the profitability question? The secret sauce.
Actually, the banking industry in Bangladesh has suffered very huge amount by the default loans. The bank's profitability has really been shrunk with that. The interest margin over here, the major earning sources, not so much as advisories. I'm talking about by and large commercial banks, and not so much on transaction also. So those interest spread is the now recently the banks have been asked to cap the interest rate, which IMF has told them not to lift that, to have a free flow. But the profitability is by and large interest spread. But I think the bad debt over here is phenomenally high all of a sudden.
Sure. All right.
So now fintech will add value or not? If the banks, they partnered with mobile financial services company, or they launched their own, I think the margin of default will be less, smaller loan cap than the large. Most of the large defaulters are all by the large people, who has mismanaged the affair or taken the money out and not been able to pay and things like this.
Yes, diversion of funds. Yes, Robert, you were saying about something you want to add?
Just one point about that area of income for banks being transactions. Open banking massively reduces the cost of transactions. So the banks aren't allowed to charge fintechs for accessing their systems. So you can initiate a transaction, and it doesn't cost you, the initiator, any money to do that. So if you instead of, let's say, a £500 transaction, you might pay 2% plus 20p, for example. So what's that? £10. That would be 10 pence instead of £10.
£10 to 10 pence. So 100.
So, yeah. So as open banking transactions and have not really got into volume yet. They've really just started to in the UK in particular to grow because there's all been data usage up until now. But when a transaction costs the initiator zero, they can charge anything and still make a profit, make a smaller profit. So, for example, with open banking, we charge 20 pence per transaction, plus no percentage.
Yeah,
I think that's going to be damaging them massively.
Massively, yes. And we've seen that in the equity market as well. The brokerages have actually become fixed, as opposed to the brokerages being charged in percentages. Actually, that leads me to the next question, and it's a little bit of philosophical as well. Bob, I'll stay with you on this one. I'll actually like to take it to all three panelists. Do you think of fintech as an innovation, or future of money, or as a mode of bringing social change? These three. So the three options are innovation, future of money, or bringing social change. Which one would you take, or all three?
I would take all three of them because it's made a phenomenal change. Because firstly, it has what has a lot of the non-bank people who would be not because they didn't have money, they were just scared to go to the bank. Now see that the bank is in their hands, So that is a fantastic social change. And obviously with that, it becomes very convenient to transact. You can buy anything and pay anything right from there. So that has been a huge economical growth for it. And obviously it's also a great innovation. All three would be fitting in perfectly. Can't take one for it.
Praveen, what's your take on this?
Yeah, I think it is all three, because with new fintechs, the people are being reached who were otherwise unbanked or they were not knowing. And in India, I think this revolution is happening because of mobile phone and data, of course, and the Aadhaar, because that linking of Aadhaar also helps. The people can do a lot of things, even if they are not tech savvy or they don't know how to operate a phone, but they can always go to a agent and put his thumb and withdraw the money. So I think JAM, what we call Jandan, Aadhaar,
Trinity,
and mobile Trinity will be there. And fintechs are also using all these things with new regulations, using RegTax, etc. I think all three will be important.
Yes. Bob, what's your take on this?
Yeah, I think so. It's going to be all three. I'd agree
all
with
three,
that.
yes.
Yeah. There are massive impacts on so many areas, and being able to bank to the previously unbankable is possible now. And so you've got ubiquitous access to banking facilities. Of course, that changes your life, and
absolutely.
So then the social impact as well. So we're already seeing it. We're already seeing
it. Yes, absolutely. So as I was wondering, like earlier, when you're going out of home, then you had to check your pockets, whether you had your wallet or not. And today you want to check whether you have your mobile phone or not. Because everything is inside that mobile phone. Whether you're carrying, you can forget your wallet, but you can't forget your phone.
And it is charged or not.
And is it charged or not? Yes.
It is charged or not.
Yes, it has enough battery life.
Yes.
Absolutely right. So, and it is a mode of bringing, social change as well, as somebody is rightly asked, because what we're seeing is that we can now pay money to the gig economy through using the phone. using the digital mode, right? And they are in a position to create a digital entity. They are in a position to, apply for the bank loans that they could not apply earlier. They're in a position to do many more things that were not possible without this innovation, actually. And we're seeing that in abundance in India, actually. So let me now very quickly, I'm also mindful of the time. We almost session. So what are our thoughts on the collaboration between fintechs and banks? Are they going to collaborate? Are they going to fight with each other? Is one is going to kill another one, or they're going to coexist as the time passes? Maybe Praveen, I would like to throw this one to you first.
Yeah, I think that they will not compete, but they will collaborate, because ultimately it is the bank which is providing, and bank has got the license, and fintech with their innovative ideas or new startups, they will reach out to maximum people and give them financial services. So it has to be a collaborative approach. It cannot be, at least in India with the regulatory framework, it has to be collaborative.
But let me actually turn this question around and ask you differently. And this is my spin on this. Do you think that over a period of time, these smaller fintechs, which some of these are actually growing faster and they become unicorns without one even realizing, very, very quickly they become unicorns. But some of these smaller fintechs which are innovative, could they be eventually bought over by the banking industry? Or do you see it?
Yes, they can be taken over by the tech, or but see, in India the regulators are also coming out with various licenses. You can say now there was a PPI license, now there is a payment aggregator license. They have this thing
Absolutely.
for payment. So for all the persons, like the companies who are become big in payment aggregator, they will get a payment aggregator license. Someone will get a digital wallet license. Someone will become payment bank. Someone will become there's a P2P license for lending. There is an NBFC license, specific NBFC license for fintech. So our regulators, especially RBI in India, has done a lot of innovations, or a lot of keeping the pace with the time. They have come out with various licenses. So I think ultimately everyone will get into a. It has to be regulated job, not this thing. Not unregulated. Like lending was there, recently those apps were there, they were giving very high interest rates and this thing. So those are also now stopped. And again, the draft paper has come on regulating these apps, how it can be done. P2P is already in place. So I think all these things will be come into an umbrella under RBI. Ultimately.
Under RBI. Yes. So so regulator will increase their coverage, and and you say that the fintechs will still have a reason to exist, because by the mandate of the regulator they may continue to exist.
Yes.
Rizwan, what's your take on what is happening in Bangladesh? Rizwan has gone off the screen. Maybe I can throw this question
for
first.
To add to that, there is a vision document also come out for 2025. There is a Niti Aayog paper has come for how digital banking should be done in India, how it has to be regulated. So I think everyone is moving into a space where something comes up, it has to be regulated.
Right. So so you're seeing regulatory expansion. Robert, what's your view on the fintech and banks collaboration? I know you've already. A lot of banks have lost a lot of business, but are you seeing any collaborative effort anywhere, or is just one-way street where the fintechs are gaining on the banks substantially and without a question?
No. There are a lot of collaborations with banks, more and more so, and I think from the bank's perspective, it's a survival matter. They want to be able to take up all the latest capabilities. And one thing we've not touched on is crypto. Crypto integration with normal banking processes we can do now. And you're starting to see, because of the AML regulations that are being imposed on banks so heavily, more and more people say, I can't make a £10,000 transaction, €15,000 transaction without it having to go through some manual verification process. And it's making life incredibly difficult just for even small transactions. Whereas if I want to do something anywhere in the world, I can use crypto. There are now crypto coins like USDT, USDC, DAI that are fixed to the dollar. So you know that if you're sending USDT somewhere, it gets there and it's still worth $1. And stable coins, and we're seeing now central bank digital currencies. I've been consulting on a couple of those recently. People are going for it big time, and there are lots and lots of reasons for it. But you would typically be looking at a stable coin environment, which basically means it's got underlying assets to the crypto coin. So I think where that's all going and where open banking is going is very interesting. And if you look at open banking, it's very, very interesting. The two biggest investors in open banking are MasterCard and Visa. Why is that? Yeah, they've got a vision. They know where it's going. And the rows that are erupting are because of their overcharging merchants all over the place now. There's been a massive case in the Supreme Court in the UK. Americans have been fighting it for years. Walmart sets up its own credit card facility because of it, etc. So all of that stuff you don't need to bother anymore. You can just use crypto systems, not necessarily a crypto coin in the fundamental sense, but something that uses the technology and uses blockchain. And NFTs are the kind of pinnacle of all that, really. So I think that's something that we should be aware of, and how to use it rather than to fight it.
Sure.
Yeah, I'll take that question that you asked me. Sorry, I was...
Yeah, that's okay. Please.
See, what was happening in Bangladesh, a lot of bank has got Fintech license. Bragg Bank, Bikash the most successful, then Rocket. But recently we have seen Citibank has tied up with the local city, not Citicorp, the Citibank is called here. They tied up with one of the Fintech to give micro loans. So definitely there is a collaboration over here. And obviously bank has got license to lend and to take deposit. The Fintech do not have that license. They have only receipt and payment. Majority of the money, the float stays in some banks. So bank is the biggest beneficiary of a Fintech operation, successful operation. Definitely. But of course, needs to be seen that how much they integrate. So integrate as in obviously the loan disbursement, how well it is done. And when it's a micro, I would see Grameen Phone, what we see the statistics, 99% recovery because of the micro loan. For Bangladesh, it is an ideal situation because, as I said, the banking industry is facing through a huge default loan. So the initiative like this to small borrowers will probably balance out better in the long run. So obviously, Fintech is actually a win-win situation for the bank to tie up and extend their lending operation over there. Definitely.
Okay. Yeah.
And also take the deposits. Yes.
Sure. I can just add to what you both have said is that, in India, the anecdotal experience is that there is a huge amount of collaboration that is happening. I can tell you a large bank in India, I shouldn't name them, but a large bank in India has actually gone with one of the very young startup in India and transformed their entire client adoption process on the retail space. So this was something which was unheard of. If you were to tell the bank that I'm a new startup and I want to help you do this, they won't even talk to you. It will take you maybe months, maybe years to just get one single appointment. And that small company, and I'm again not necessarily wanting to name it, but that company has already raised millions of dollars in startup funding. The point that I'm trying to make is that it's not one solitary example that I'm quoting about. There are multiple such examples across the banking and fintech space where there's huge amount of collaboration that is happening. Every day you hear that the banks are looking for more. It's also being driven by the fact that the banking industry in India has become exceedingly competitive. And there is that what we call it FOMO, the fear of missing out. If you do not, adapt, then your competitor will eat you alive. And therefore, you're not competing with the fintechs. You're actually worried about that the other banks might adopt the technology, and therefore you will get left behind. And therefore they're willing to actually adopt. So I would see that the collaboration is happening from both sides, because the fintechs don't have the financial muscle that the banks have. And the banks don't have the technology and the agility that the fintechs bring in. So it's actually a very symbiotic relationship, which is helping both sides to actually grow muscle and become agile. So I think that
and I think RBI also,
yeah, sure,
RBI is
please.
also helping. They have come up with the innovation hub, and they
Yes,
are coming out with
yeah,
sandboxes for various
created,
things.
yes.
So I think that
Absolutely,
it'll be very helpful for collaboration.
The regulator is creating that environment for this experiment to succeed. And it's only taking the banking to a higher and higher level. The cost of transaction, the cost of banking, cost of keeping money in a bank is coming down. And especially in a low interest rate environment, that actually makes a huge impact on the deposit holder, on the client, So I don't know how much time do we have more, but I wanted to ask a few very important questions from here. One question that I did not ask, but Bob has already given his views. That was about what will be the greatest impact on financial markets in 2022. And you spoke about the crypto and the NFTs and other things. But I'd like to request my other two panelists to actually give their views on this, that what do you think is going to have the greatest impact in 2022 and beyond? Anyone can take this. I have to put myself on I have to close my video for a moment because I have to connect to a power source. Sorry, in the room where I'm sitting, I don't have a power source and my battery is going down very quickly. So you guys can continue the answer.
Rizwan can answer that about the stock market. I let it pass because I don't know much about it.
All right, sure. Rizwan, please.
Well, I'm hoping that a lot of successful fintech will list themselves, and obviously the market will benefit from that. In Bangladesh, none of them are listed. The bank, their owner might be, but none of them are listed. And so that's what we like to see in Bangladesh, like company like Bikash and all list. So that will create it. But also a lot of startup has started because of fintechs. That's a very interesting thing, because on back of the payment methods, a lot of people are building their business model. It could be agro, it could be pharma, it could be herbal, it could be any home appliances homegrown decor and things like this. And that has given a very big economic shape to Bangladesh. And I think the growth that we are seeing in the country is that local, there's been a huge boost because of fintechs, definitely. Right now, you could do more transaction than you did before. So how the market get affected, obviously, whenever there is more transaction, more velocity, more changing hands from one end to another, it impacts the economy, and obviously your GDP figure looks better. So that was we are hoping through fintechs, because right now 1/3 of the world population is unbanked. More and more they get banked with these thing. I think it's very good growth for the whole economy.
Sure.
Yes.
That's my take on that.
Thanks, Rizwan. Yes.
And the life of IPO in India is also reduced by half.
Yes.
For the new startups.
Yes. Of course. India has seen 70 unicorns coming up in just 2021, and almost half of them, bulk of them are actually fintechs.
Related to payments or
finance. Yes, payments, and also in insurance space. So maybe there is one last question that I'd like to ask, and this is actually open to all the panelists. Could you please mention the entry barriers that you see for any budding entrepreneurs who may be having aspirations to enter into fintech space? What are the pitfalls that they should be aware about? What are the challenges that they should be ready for? How should they plan to go about it? And maybe I can start with Bob, please.
Well, bit of self-interest here, I'll admit at the beginning, but one of the biggest problems is building the platform at the beginning and having enterprise quality systems costs a lot of money, even at Indian prices. It costs a lot of money and takes a bit of time. So we've developed a fintech framework so that you can take a payment gateway and an open banking system, etc., at extremely low cost. So, for example, you can have a full payment gateway, being cards, Stripe, PayPal, and open banking, will only cost you £2,500 a month instead of £500,000 to develop, or whatever the figures are. So, I think more and more services like that will come along, where the entry barriers will be reduced significantly to people that want to get into payments. So, as I said, a bit of self-interest in there.
Yeah, thanks, Rob. Praveen sir, your views on this?
I think they should focus on not developing something which is already developed by a bigger player. Either collaborate with them and target a niche segment, or the something which is unique, or which is unique to that idea. Put more focus on that to start the business, start the startup. And once they reach a scale, that time they should invest in building the back end, instead of taking it from someone like, which is in fintechs. One is that you have to take it from regulatory point of view, you have to take it from a bank. But there are many things are there which they can take it, like for KYC. There are many platforms are available which can help you do the KYC. There are many platforms are there, they can help you do you can use their CRMs, etc. So all those basic modules, they should take it from outside. That's what I feel for the fintechs, and they should concentrate on the niche thing what they want to do, so that it becomes successful.
So the two panelists that I've heard till now in this aspect is, in terms of the entry barriers, the money is the main entry barrier. And selecting the right kind of idea, without that shouldn't go in. And you're saying that there will be, it's not easy to sustain alone in this huge market. So it's better to have strong partnerships, maybe one anchor client before you start building something, because proof of concept can sometimes kill you. I have experienced that myself. With my own startup, as well as with some of the other startups that I assist, I'm seeing same story repeating itself again, and that is what is called value of death. So you spend all your money in building the product, and when you start going to commercialize it, at that point of time it takes you longer than what you expected, and that period of time the challenges are unsurmountable. And if you're not getting a client, so you can't raise money, you're not getting money, and therefore you can't market yourself well. So that becomes a very big challenge at some point in time in the business cycle. So these are few. Rizwan, what would be your advice?
My thing is, obviously the biggest entry barrier. The biggest entry barrier, at least in our country, is obviously funding. Because obviously also lack of knowledge on a lot of things, a lot of experience. So a lot of company goes down. You have a very fancy idea, you even get the money, but you don't have the management capability, and that's been a very big problem. At least my initiative of funding a few fintech has created that. But I think that teaming up is the most important thing, and there has to be a mentoring, somebody who knows about the business to get him on board, whatever it takes. And so that you have a guide. And a lot of company a lot of small startups, they fail because they think they can do it because he has done it. And then he has done it because he had certain knowledge and he has been successful. Not necessarily I'll be successful because I don't have the knowledge of the whole business. But I think fintech should be used as a means of financial transaction, and to strengthen that part of yours, because you don't need to build that. They should look at other ideas which will complement each other. And that's why the startups should think that what they have is to leverage that with what they don't have. And that is the key to it. And then they can definitely look for funding, having a good business model. That's my take on that.
Wonderful. So thanks a lot. There have been, so many questions and such interesting, perspectives that you've got from our panelists. I know this is a huge subject. It's a very vast subject, and we can continue talking about it. But it has been a great pleasure for all of us actually to bring this webinar to you, to this discussion with the experts. Maybe there are some questions which have not been answered. We will just ask the organizer to actually make a list of the questions that are still there, which have not been answered, and we'd like to, take some time out to answer those questions in writing, maybe. Is that okay, Priyanka?
Yes, sir.
All right. So thanks then. With that, I'd like to, thank all the panelists, my fellow panelists, for their time and for sharing their perspective. I also thank the organizers for putting this thing together. Very interesting webinar. And I have to thank all the participants, the audience, to be patiently listening and sharing your concerns, your questions, your queries with us, so that we could talk about from our experience. So thanks a lot once again for everyone, and I wish you all very best. And we will, as I said, we'll try to make the effort to respond to the questions that have not been answered till now. But I understand that because the panelists have given perspective on a lot of things and broad perspective, so you would have got more or less broad answers to your questions anyways. So thank you with those words. I'd like my panelists, if they would like to say something, please, your final word, please. Rizwan, why don't you start?
Yeah, sorry. Well, FinTech is here to stay, and I think collaborating or making use of it could actually get a lot of unbanked people in, and I think there's a huge opportunity for them, and I think it will help the global GDP if it's used well. Thank you very much.
Wonderful.
One
Yes,
thing,
Bob.
we need to be careful about the cybersecurity and the cyber crime.
Yes, of course. That was one question that got left out actually. So anyways, yes. Bob, please. For you.
Yeah, just happy Christmas, everybody, and don't forget
Merry Christmas.
don't forget that lots of countries will be shut down for the next 2 weeks because it's impossible to get anything done. So that's how we are.
Thanks a lot. Yeah.
Yeah, thank you very much. Thank you very much. I think fintech will help in India at least to fill the gap between Bharat and India. And I think once that gap is filled up, we'll grow or we'll achieve that $1 trillion economy as the government thinks to achieve. Thank you very much.
Banking definitely is the wheels of the economy, and without banking, you cannot grow the economy. And that 5 trillion and 10 trillion dreams, they will all be dreams unless our banks can redefine themselves and learn to work with fintechs and become more agile and stronger in the process. So thanks everyone. Thank you very much for attending.
Thank you very much.
Yes.
Thank you very much.
Yes.
Okay. Thank you. Thank you once again. Thank you very much.
Thanks a lot.